Hello, everybody. Glad to be back with you on Hospitality Talks. We got two wonderful hoteliers with us from different parts of the world. They're joining us. But to start out with, hospitality sector around the world is poised to emerge stronger from COVID-19 lockdown with a healthy tourism economy, hopefully very, very soon. Yet, hospitality organizations will find themselves in a very different business environment and dealing with some important changes, including consumer behavior and expectations, staffing shortages, different designs, and an ever-demanding investment landscape. This recovery process, whilst difficult, presents some opportunities for the industry to reinvent itself and for companies to grow. Our panelists today will help us understand how to respond to challenges while seizing the opportunities as they present themselves. I am Abid Butt, glad to be here with you. And as always, I'm here with our co-host, Sam-Erik. Sam.
Yes, welcome to the show. I'm glad to see that we have now a number of live viewers joining us, so warm welcome. Just write in the name and where you're viewing from, and so we can say hello to you. And we also encourage you to put any comments or any questions you have for our guest. We have really a great show. We are discussing about two companies who combined have well over 600 hotels around the world. And if anyone knows, they know what they have gone through the global pandemic and also the opportunities that it has presenting itself. So if it's all right, Abid, let's bring our guest to start the discussion.
Yes, please. Let's do. Can't wait. So we are joined by today, first, Dillip Rajakarier, who is the Group Chief Executive Officer of Minor International and Chief Executive Officer of Minor Hotels. Dillip leads the Minor International with an overall portfolio of 536 hotels and resorts in 56 countries. During his time with Minor, the company has seen the group's core Anantara brand grow from a handful of properties to become a leading operator and developer with currently 42 luxury properties in operations. Dillip has also been instrumental in the expansion of the hotel portfolio, including 2018's acquisition of NH Hotel Group and the strategic additions of Tivoli, Elevana, Oaks, and most recently, Boscolo Hotels. Dillip, great to have you with us.
And Thank you, Abid.
Thank you. And we also have with us a gentleman from Nepal today, Rahul Chaudhry, who is Managing Director and CEO of CG Hospitality Holdings and CG Corporate Global. Rahul leads the teams of the renowned Nepalese multinational conglomerate with 140 years of operations and 4 generations of the family involvement, and as the only billion-dollar corporation listed by Forbes in Nepal. CG Hospitality Holding owns and operates about 141 hotels and resorts with more than 8,000 keys in 12 countries and 91 destinations. The portfolio of hotels includes global brand as well as some of the regional brands, including Zinc, Fern, and The Farm. Rahul, thanks for your time and thanks for joining us.
Thank you, Abid. Thanks, Sam. It's a pleasure being here. Thank you.
So if it's okay, Rahul, we're going to start with you and we'll get straight into it because people are joining us. So we'll start the discussion. Rahul, if you wouldn't mind, just a very brief recap of what's the last 12 months been like. Most of the focus is going to be on recovery, but if you wouldn't mind just sharing What has kept you busy for the last 12 months?
The last 12 months hasn't been easy to say the least. I think we all know that we have been through a very, very difficult time. Starting from March last year, when the pandemic hit, obviously it's no hidden truth that whenever any crisis happens, it's the hospitality sector that gets affected first. So our first instinct was to immediately try and assess what would be potentially the long-term ramification of the pandemic. Obviously, one can't guess and one can't really predict because it is obviously such a new pandemic as well. But our first instinct was to look at our current businesses, where we are in terms of our business models, where we are in terms of the cost structures, where we are overall in the hospitality sector itself, and how relevant we would be in the future itself. And we embarked on a journey, I would say. Actually, it was a good decision, I must say, that we decided that we should start working on our cost basis right from the beginning. And obviously, it wasn't an easy decision when you are in so many different geographies and so many different countries, dealing with different emotions, dealing with different laws of the land, dealing with operations. But yet, some decisions had to be taken. But I mean, I can elaborate more as we go on with the conversations on the specifics of what all we had to do. But we pretty much followed a path of a three-pronged path, which is going to be a survival, revival, and a thrival strategy. And the first quarter or the first 2 quarters was going to be focused on survival. And that's what we decided to do. And re-looking at our businesses, reimagining, rethinking, re-strategizing our cost basis, thinking outside the box. And just when we thought that things were slowly starting to come back around the third quarter of last year, now we are back to square one on a survival mode. So I would say that it's not been easy, but I also believe that we as a hospitality fraternity are very resilient. And I do know that we are going to bounce back, but we have already sown the seeds of being able to handle this pandemic, even if it takes a longer time.
Well, thank you. Thank you for that, Rahul. It indeed has been a very tough time for all organizations, but travel and tourism particularly has been hardest hit. So it certainly has not been an easy year and a half or so. Rahul, you have operations in a lot of emerging markets as well as mature markets. Talk to us a little bit about the challenges in operating in emerging markets. What is that like? What are the operating issues? You have acquired hotels in some of the most challenging markets at possibly the most challenging times. What was that like?
No, you're right, Abid. Destiny has it so that our strategy has always been to go into markets, frontier and emerging markets, because we believe that the opportunities to enter those markets were immense, and the cost basis to enter those markets were also attractive. But having said that, obviously those are relevant when you buy at the downside, but you ride the storm and then you go on to the good side when things are getting better. Unfortunately, the markets that we have been in or we are in, we also have to accept the reality that those markets also have a pretty fluctuating situation, whether it comes in terms of political issues, whether it comes in terms of, I mean, natural disasters are there for everyone. But the effect of that, what happens in emerging and frontier markets are far larger and far greater than those with a mature economy. So, I mean, across the board, we have our properties in frontier and emerging markets like Nepal, Kenya, Sri Lanka, when it was just going through a very difficult time back in 2000, and I mean, even places like Rwanda. So these are just some examples of markets which are just coming out of the turmoil that they were in and getting down to a steady situation. But now we see that that has taken a little bit of a backseat altogether. And being based out of Nepal and handling operations in so many different countries, Dilip also knows it's not easy, and especially in times of COVID when you have no mobility whatsoever. I mean, you literally have to do it virtually, and we all know that the hospitality industry is more of a personalized business, requires a lot of interaction, requires a lot of in-person involvement on the ground. And I mean, think of it this way, that I have not been able to travel to most of our hotels apart from Nepal, where I am right now, for almost 1.5 years. And there's only so much that can be done over Zoom. So it's very difficult to, indeed, it's very difficult to handle the operations. But in hindsight, when you talk about mature markets like, let's say, America, we have a hotel at the JFK, and markets like Philippines. I mean, the systems are much more, I would say, prepared to be able to handle such a situation. I mean, you have the government and systems also that are there to assist you right away. I mean, an example I'll give you at our JFK property itself. I mean, immediately the government came on board, and they said that we want to help you with the PPP, as we all know, the payroll protection program, which was actually a very big breather for our hotel in at JFK, and we are still surviving because of that. But on the hindsight, when you talk about markets like Nepal, where the system is not that mature, you have no choice but to still live with whatever you have and try to survive in these difficult times, because the decision making, the policies, the sensitivity towards the sector is very less, as we also saw in India. I mean, the when the budgets came out, and when the relief plans came out from the government, very little was really allocated towards the hospitality sector. So there are challenges and opportunities when you are dealing with emerging markets and frontier markets. But I believe that the frontier markets and emerging markets suffer more in times of crisis like this.
So, Rahul, if I recall correctly, not too long ago, I believe you had acquired a hotel in Kenya. Talk to us about when you're evaluating these deals in markets like Kenya or Rwanda or Sri Lanka just immediately after the civil war was ending. How do you evaluate these deals? How do you underwrite these deals? And what kind of risk factors are you allocating as you evaluate these deals? A lot of these markets might or might not have debt available locally. So how do you consummate these deals?
It's funny you asked that question, Abid, but when we evaluated these deals at that point in time, I mean, these markets were literally rocking, if I may say so. And these markets were just in a growth trajectory altogether. But unfortunately, I mean, I'll give an example. Just like the Kenya opportunity, we bought that asset literally, we concluded the deal literally 2 weeks before the pandemic hit. Now, I mean, do you call that a good thing or a bad thing? I mean, it's like the theory you call it, is the glass half empty or is the glass half full? I mean, just focusing on that opportunity, I will talk a little bit as you asked me how I looked at it. I mean, before the COVID hit, I mean, it was a brilliant opportunity because we got in at the right price. Kenya is the gateway to East Africa. I mean, it's a very lucrative market as well. And for especially a investor and operator like us, who has the ambition to grow in East Africa as well. But having said that, the moment the COVID hit, we were pushed into a corner to have to close the property. But like I said, that you have to look at this COVID situation. Obviously, I mean, taking into consideration the millions of lives lost, which is very, very unfortunate, but focusing specifically on the Kenya opportunity, that we could have looked at this and said that, the glass is half empty. But we said, you know what? We closed the hotel. It was a legacy hotel with staffing that was there for decades and decades. And the reason why the hotel's P&L was being brought down was because of its payroll cost and its legacy costs. So the pandemic helped us to restructure the business itself by way of retention, by way of VRFs. And now we are in a situation where we are looking at opening the property completely afresh. So you see, the point I'm trying to make is that you can always make the most of any adverse situation as well. It just depends on you, how you look at it. I mean, we got into this investment at the right time, at the right value, and it was completely strategically fit for us. But then the pandemic hit. We could have sat back and said, you know what, we can't do anything. But then we got on a fast track. We were closed for the past 1 year. We have completely reset the whole property. We have completely reimagined the cost structures. We have rethought about our entire business model. And now we are going to open the property very soon. So I believe all of these opportunities come with that silver lining, as one would call it.
Absolutely. Hence the theme of our session today about turbulent times and opportunities. Those are the things that we want to talk about. Rahul, tell us a bit about operating during this pandemic. Were there cash flow issues? Were there things that you had to deal with to restructure the hospitality business, generally speaking? And what was that like?
No, absolutely, Abid. I mean, we, like Dillip and mine, we have an operating, we operate hotels as well as we develop and own hotels. I mean, it's a chicken and egg situation for operators and an investor. I mean, from an investor's point of view, we don't have the cash. If the revenues don't come in, we are not able to even keep the hotel open. And from a management point of view, if the owner decides to shut the hotel, you don't have cash flows to sustain your own organization. So it's one you call something like a chain effect. You know? So it's been very, very difficult. And for any operating company to survive, you have to have the hotels open. So it starts from keeping the hotels open from an owner and developer's point of view. So it has been very, very challenging, and we've had to downscale everywhere. But what we have done is that we have done these downscaling with minimal impact on the staff reduction, minimal impact on the overall experience of the hotel itself and operating the hotel itself. Of course, it's had its impact, there's no doubt about it. But that has helped to a collaborative effort between the operator as well as the owner developer to tide through this storm. And I believe, and you know, as I mentioned, that if the banks and the institutions were playing ball with us to the extent that we wanted, things would have become much better by way of debt restructuring. Since it did not happen, I mean, we also cannot keep the hotels closed forever, right? So we have worked with operators and our partners all over the world to be able to survive, because you see, we are all in this together and we cannot survive without one another. And I think this also shows, when I talked about resilience, this also shows how solid our fraternity is. In these difficult times, whether it is the employees, whether it is your management, whether it is your operators, all the way to your vendors, to the owners of the property. We all have worked together to make sure that the properties that are operating, the properties are surviving, because without that, trust me, we all might as well shut shop and close businesses and call it a day.
Well, you know, to your point, Rahul, the pandemic actually might have brought the fraternity further together because we've all learned a great deal as to how to operate in times of crisis. So I think the industry itself is much farther together. I'll turn it over to Sam in a bit, but before I do, could you please share what was it like working with the financial institutions and the lenders? Were they willing to work with you, particularly in financial institutions in emerging markets? What were those conversations like?
It was not easy, to say the least, because Coincidentally, the group CG also owns the largest bank in the private sector in Nepal. So, when we look at it from a bank's perspective, the banks are obviously driven by the directives of the central bank, right? To the extent of the reliefs, as well as how much they can play ball with the private sector businesses. Now, there is only so much that a bank can also do in order to give the relief to the entrepreneurs, and we understand that. But this is where the central bank and the government comes to play again, and that's what I mentioned fundamentally of how the system is able to handle this, and how the system is able to pass on those directives and those incentives to the banks in the private sector who are giving these loans to the businesses. It's not been easy, I will tell you that. The banks did play ball to a certain extent in the first wave that happened in last year, but now we are again back to the same situation, whereby we are reaching out to the banks to give us more reliefs. We believe that this is going to be even worse than the first one. That's what we feel, or the intensity of the same. But the banks have not come forth as yet. But we are still engaging, and I believe all of them are. There is this tendency for everyone to wait and watch. Oh, let's see what happens tomorrow. Whereas we, as entrepreneurs, have to prepare for what's happening day after. And that is the unfortunate dilemma when you are running the businesses like a hotel. You can't just switch on and off. Just to switch on the hotel takes you some time, and to switch it off, it takes you a lot of time again.
Very well said. Very well said. And I hope that the financial institutions around the world recognize the value of this industry quite candidly, and the contribution to economies around the globe is huge as a result of travel and tourism. But we'll get to that in a moment. Let me turn it over to Sam, and I'll be with you in a little bit. Sam.
Thank you. I'd like to talk a little bit about, or ask you a question about the travelers' expectations. What have you noticed? How has this all affected? There's a tremendous pent-up demand, and now hopefully when the travelers start again in different part of the world, what have you noticed? What signals are you getting, or what are the expectations now from the traveler? Is it it's back to good old normal, or it's going to be different? If it's different, in what way?
Okay, Sam, I'd like to answer that question in 3 different aspects, if I may. One is going to be from a customer preference point of view. Second is going to be from a segment point of view. And I would say third is from an emerging market potential point of view. So let me go first to the expectation of the guest itself point of view. It's no hidden truth that customers are becoming much more aware of safety protocols, are becoming much more aware of social distancing, are becoming much more aware of technological advancements that are coming into properties. When you call it by way of scanning a barcode to see the menu, and also placing orders now from your phone itself, or entering a room by way of your phone. So everything is becoming quite touch-free from that perspective, because people are getting to expect more safety measures. While they are expecting the same level of luxury, that's how our mind works, same level of service, same level of attention. But what is happening that it is being done remotely. Now, how a operator is able to achieve that by way of interaction in person, by way of social distancing, or by way of marketing and communication, that is something that everyone is figuring out. I think everyone is evolving in that aspect. Every operator is trying to see how they can connect with the client itself, right from the time before they book all the way till after they have booked, and they can get them back again. That is from the customer expectation point of view. From the segmentation point of view, I believe that the leisure market and the wellness market is going to take the forefront of hospitality moving forward. And when you talk about leisure, destinations or you talk about leisure properties, they in many ways are natural distancing themselves. I mean, you go to a resort. Let's take the example of one of our hotels in Philippines, the Farm. It is a luxury, wellness, holistic medical resort, and I mean that resort has won multiple accolades globally. One of the best wellness resorts in the world. But I mean, it's amazing. I mean, the business that we have done in that resort during the COVID last year was even better ever since the property has been operational. So people are looking for leisure business. People are looking to get away from the ordinary. People are looking to be healthy, eating well, and also looking at taking care of their health. Now, the third aspect, as I mentioned, was on the new market that has emerged. Now, this I will talk about specifically from our properties in Nepal. I mean, we have 6 properties in Nepal at the moment, but the one property that has done quite well is our Safari Lodge in Chitwan National Park. Now, we have survived with that business opening purely by way of the domestic market. And that was a market that we never focused on because we always felt that the domestic market will not be able to afford the product we have. I mean, similarly even in Philippines, before the pandemic, our focus on the local market domestic market was hardly 15 to 20%. But now you see that the domestic market is huge. I mean, take the case of a market like India. You have a population of almost close to 1.5 billion people. I mean, there's an opportunity there itself. An immense domestic market which has the purchasing power and the spending power. That is what is going to see one through this pandemic. Think about China. China is surviving purely on the domestic market right now. And that's exactly what we as a country like Nepal, probably one of the most important advantages for us is we are sandwiched between the two giants around the world with 3 billion population. And perhaps they are going to come to a country that is relatively less hit than a country that is more hit. And we hope that ripple in a good way is going to rub off to Nepal. So I believe that this pandemic has really shaped our thinking to look at it from different perspectives because, we also start thinking to ourselves, is our business going to be relevant 10 years from now? And that question keeps coming to us. You have nowadays, you see these videos in YouTube. Robots are coming to your room to deliver your room service. I mean, what happened to personalized service, right? I know of hotels, I mean, surprisingly or shockingly, it depends how you want to take it, where you check in, you book your room through the phone, you enter your room through your phone, you order your meals through your phone, you switch on your AC through your phone, you switch off your lights through your phone, you pay your bills through your phone. So tell me, what exactly have you done? You pretty much digitized the entire experience altogether. But is that going to be possible in a business like luxury? Is that going to be possible in a business like wellness? I don't think so. So we have to always balance the changing times with the relevance of the business and the fundamentals of the business itself. Without that, I don't think any developer or operator is going to be successful, and that balance and learning is what you have to adapt to and make the most of it.
Yes, very good. There's a lot of talk now about that we are in a state of transformation, and many of the travelers, particularly the millennials and the younger travelers, are very concerned. Not only they are concerned, but there's about the sustainability factor. How are the hospitality and the travel destinations dealing with that? How will this place look like when my grandchildren will come to visit? Any thoughts on that? What are your views, and how are you as a hotel owner putting some plans together to that deals with the sustainability, because that's can be obviously something that people are also looking at?
Sure. No, Sam, that's a very good question. And, our group is invested already in probably the only eco-friendly, environment-friendly hotel group in India, and one of the largest management companies actually, called Concept Hospitality. And I must compliment my partners, the Kanampinli family, that they started this initiatives many years back, and they have excelled in this business, whereby every single product that they operate has a sustainable angle to it. So we are already in the business whereby the hardware, till now, to a great extent, the hardware was being focused on in terms of the sustainable aspects. But now, when you talk about the service efficiencies, as I mentioned, the digitization, that also comes from sustainability angles, from the perspective of using of materials such as your paper, not using too much of paper, not using too much of plastic, doing things in all of these ways, I think has already always been our business model from Concept Hospitality. I think our group had already embarked on this journey a long time back, and we are constantly evolving how we can continue this initiative from a service point of view, from a product point of view, and from a customer interaction point of view. So I think this is going to evolve over a period of time. And my last answer, I believe I said that to a great extent, even from the food offering, even because everyone is now moving more and more towards your healthy habits. So finally, a pandemic had to hit us before we moved down that path.
Yeah,
At
that's
least
really
something was
true.
good, right?
That's really true. I mean, these are always these global events that shape our future, and that's so true. Well, thank you very much. I mean, just a comment on that. These robotic hotels. I mean, I've been looking at some of these robotic hotels virtually, and I think they belong more to the amusement park factory than the real life, because people still want to have a personalized experience, and how personal it is, it's a different depending on the type of hotel it is. But well, thank you very much for your answers, Rahul, and over to you, Abid.
Well, thank you, Sam. Rahul, one last question before we bring our next guest in. Tell us a bit about future plans for CG Holdings, but particularly for the hospitality business. What are you looking at for the future?
Actually, our strategy of expansion never stopped, because as I said that our focus was on the frontier and emerging markets, which it still is. Obviously, we also, having said that, it's not like we don't look at some strategic markets as well, but our strategy is going to continue. We are going to continue looking at opportunistic deals in these markets, distressed assets. Just yesterday I was reading an article that came out where the Accor CEO, global CEO, Sebastian Bazin, he mentioned that he foresees that distressed assets are yet to come into the forefront, and they're really going to come in a flurry in the future. And our view is the same. We believe that our strategy for focusing on the emerging and frontier markets is a good one. We are continually looking at opportunities to acquire, continually adding assets in our management company. I mean, we virtually are adding 15 to 20 hotels every year through our operating capabilities in India. In fact, HVS in the last year during the pandemic, which was about 15, 17 hotels just in India alone, which is quite commendable. So our strategy is to stay on course and to work on this and continue finding these opportunities.
Fabulous. Well, look, thank you so much, Rahul. Thanks for all the input. Please stay with us. We'll have you back in a moment. At this point, Sam, let's bring Dillip in so that we can have a better conversation with Dillip. Dillip, thank you again for your time and joining us. If you wouldn't mind doing a very brief recap as well as to what the past 12 months have been like. Again, we're going to be focused on recovery, but if you wouldn't mind sharing what your year has been for the past 12 months.
Yeah, hi, Abid, and hi, Sam. Thank you for having me today. I think the last 12 months or the last 18 months has been clearly challenging, as we have seen. For us, the COVID started in Jan last year with our restaurants in China. So we were the first to get hit in China. We've got about 100 restaurants under the food group. But I think we saw it as an opportunity because we were also able to learn from the learnings in terms of how we coped with the China situation, so that when COVID then start to flow into Asia, Middle East, Africa, and also into Europe, we were well prepared. And I think what we did was we came up with a strategy in terms of what we call BBC, or it's called Business Beyond COVID. And we had three phases. The first phase was mainly focusing on the health and safety of our team members, of our employees, and also of our guests and customers. So that was our first focus. And we came up with quite a few initiatives in terms of making sure that these initiatives sort of gave our customers and our guests the confidence and the comfort to continue to use our hotels, to use our food outlets as well. And then we then quickly moved on to stress testing our business models, both in terms of break-even points, trying to see how we can reduce the cash burn, and also trying to make sure that these businesses are sustainable in the future as well. And the third one was under the first phase was also to jump into what we call liquidity and cash flow management as well, which included making sure that all cash was pretty much tightly controlled. Cost cutting measures were introduced. Capex or capital expenditure was reviewed and postponed into the following months. And also we had to do some smart planning in terms of our team members and our HR capabilities as well. So that was pretty much what we did on the first phase. We then moved on to the second phase, which we moved pretty quick. And the second phase was to prepare the company into a medium term rebound. And as we know, China started to rebound pretty quick. And I think we were quite surprised how quickly China rebounded. So much so, China for the whole year last year actually ended up in a profit situation, even though the first 6 months were loss making as well. So they managed to quickly pivot and make sure that they turned around the business pretty quick. And also on the food group side, quite lucky because with all our restaurants, we were able to get our food group into a profit situation from July of last year. And don't forget, Thailand has gone through many pandemics. Thailand's gone through SARS, Thailand's gone through bird flu, swine flu, everything else. And so we're pretty much geared and used to dealing with these pandemics, except it was the fear of the unknown, where
Yep,
the
yep,
question is how long is this going to last and how soon this recovery is going to happen. But in our case, what we did was we did a scenario planning where we said this could last for at least 2 years, because this pandemic is not a regional one, it's a global pandemic. And it started as a humanitarian crisis. And I think, and it was sad to see, in different countries people losing their livelihoods and their lives as well.
yep.
But also it was sad to see that many governments actually really bodged up the COVID situation because they didn't have a clue. I think in Thailand and most Asian countries were pretty quick to rebound and also, come take pandemic under control because they have gone through these pandemics before. So wave one and wave two, we saw the two waves actually not too bad for us in Asia as a country. But I think where we were hit was Europe and South America and the other places where, with the NH, we had a much bigger exposure there.
Yep,
And I
yep,
think now we are now into the third phase where we are now building our business for the long term in terms of building up long term sustainability, to build up long term growth, and also looking at what are the opportunities we will have beyond COVID as well. And we're seeing a lot actually. And I think there is more to come, which we will definitely take advantage of, like as we have done in the past. So that's where we are from. That's where
Well, thank you.
a quick
Thank you
snap.
for that, Dillip. I really appreciate that. Dillip, talk a little bit about managing your balance sheet and raising capital. What has that process been like? Tell us if you have had any cash flow issues as an organization and how have you managed that portion of it?
Yeah, I think hospitality industry was hit the hardest, and of course, hospitality industry, it's very labor intensive. It's also very capital heavy as well because you are owning assets on your balance sheet. So I think for us, yes, we did go into a cash crunch early last year. But I think the good thing was we were very proactive in terms of coming up with scenario plannings and also engaging with our banks and also making sure on a proactive basis that we protected our balance sheet and our cash flow. So last year, what we did was, in spite of the COVID, in March, April of last year, we managed to strengthen our balance sheet. So we did a rights issue. Our shareholders were very supportive, and the rights issue was 3 times oversubscribed. We did a bond issue. Our bond issue was 10 times oversubscribed, and it was guaranteed by Bangkok Bank, who had a lot of confidence in our business model and also in our company because you know from a performance perspective the company has been the strongest, and we are now seen as a global hospitality player both on the food side and also on the hotel side. And the financial institutions and our bondholders were quite supportive. Hence we managed to do a bond issue as well. This is in the middle of the crisis. And then also we did some warrants as well. So that actually gassed up our cash reserves so that we can go through the pandemic for at least 2 years. And that was our plan, which we did last year. Now, this year, we are also dealing with NH, so which is a big exposure we have in Europe. NH is a listed company in Spain, and thankfully, like I have to say, actually, I was on a call today, and we've launched our bond. We're doing the book building today, and I understand it's gone very successful and it's gone really well. So we managed to raise another bond in Europe for NH at a pretty low cost. And also, we managed to postpone our bond, which expires in 2023, the maturity wall, to 2026. So we postponed the bond now to 2026. We had a government grant in Spain for $250 million. We managed to renegotiate that and postpone that to 2026 from 2023. And also, we had a revolving credit facility of 275 million euros. We postponed that also to 2026. So we have comfortably like postponed all our maturity walls to from 2023 to 2026, strengthening the balance sheet and the cash flow situation of the company. And today, thankfully, Europe is starting to see some green shoots, which is great. And hopefully, that may continue. And I hope, like, we will be able to, like this month, for the first time, our NH hotels will break even from a cash perspective. So that's a big turnaround for us after burning cash for almost 18 months.
Well, Dilip, congratulations. I know a lot of these plans and conversations are never easy, particularly in the midst of a crisis, but congrats that you've been able to shore up the capital to provide you a long runway to go through and weather the storm. Talk a little bit about the NH acquisition. What was in the investment thesis? What has been the performance like over this period? Of course, this pandemic, nobody could have foreseen that. I don't think any deals were underwritten for COVID. But outside that, has NH Hotel acquisition been as per your investment thesis? And are you generally happy with how the performance has gone?
Yeah, sure. I think one of the only downsides I would mention is that when we did our investment thesis, we never did a scenario for a pandemic situation, and I wish we did. But I think in our case, we build our businesses for the long term, and because this is our core business, and we build a very sustainable business as well. Now coming back to NH acquisition, it took us about a year to unlock this whole acquisition because, as you know, the NH was pretty much mainly held by a Chinese shareholder whom we acquired the shares. There was a lot of issues at the board level and also at the shareholder level. And by us coming in, and we did a tender offer where it was fully supported by our Bangkok bank in Thailand. They underwrote the full thing, underwrote 100% debt because they believed in the acquisition. And the main thesis was, it would put Minor as a company as a truly global player. Because today, prior to the acquisition, Minor was very strong in Asia, Middle East, Africa, and I would say Asia Pac, including Australia. By doing NH, it actually gave us a global presence where we had access to the global markets, which is like Europe, the Americas, and also the US as well. So that and I have to say, like, not even one country we overlap by doing the NH acquisition. So we pretty much, got into new countries and new territories, and pretty much mature markets, and the markets where there is great barriers of entry. The assets were in fantastic locations, in key locations, and also there was three things to the asset base, because there was one, NH had about 100 hotels which were freehold hotels, including assets which we own, and that also strengthened our balance sheet. The second one was also NH also had a business model which was a lease business model where we had about 230 hotels under a sale and leaseback, or sorry, under a leaseback model, and then we also had hotels under the management model as well. And I have to say, like, we acquired the company, the whole company, at about 11 times EBITDA multiple, which was fantastic at that time. And the first year, the first full year after the acquisition, we actually, our profits increased in the first full year, and our multiply, the actual asset multiplier, it went down to 9 times. So yes, prior to COVID, NH was a great acquisition, including the freehold asset base, and it's not just the management platform, but it's a freehold asset based model, which is fantastic. So we own 95% of the hotels of the company, which is still kept as a listed company, and we continue to grow the business in Europe. In spite of the COVID situation, we have signed new hotels, we've done some new deals, we've signed some new markets. So we continue to expand as well. So we are looking at it more from an opportunistic perspective. And actually, the NH has really helped us to become a truly global player within the hospitality
Fabulous.
industry. Yeah.
Well, that's terrific. I mean, certainly organic growth can take a long time, and M&A is the way to have a larger footprint in a shorter time period. So, thank you for sharing the background on NH acquisition. Are you continuing, Dillip, to look at other opportunities? I know you recently closed on Vascolo. So, from that point of view, for further acquisitions, what is the capital market situation like? Is the debt readily available, and is it relatively at reasonable cost? Because I understand in most of the markets, debt is pretty expensive, particularly in travel and tourism industry.
Yeah, I think today, of course, hospitality industry is not seen as a preferred place to park capital. But I have to say, if you have assets which are in great locations or in key locations where there is barriers of entry, and you have a clear title deed and there's no issues, there's still a huge demand. The reason I'm saying that is that we've also we've done two things. So whilst we continue to expand our asset portfolio, We've also been recycling our assets where we have mature assets, where we have had the earnings have completely matured. And what we have done is we've recycled those assets, but not losing them, but we've recycled them and done a sale and leaseback. And I think we're working with some of the big funds and the big fund managers here in Europe, who have a lot of confidence in NH, and that's how the Boscolo deal was done as well, which gives us great opportunity with 8 fantastic hotels in Europe, for us to also roll out the Anantara brand. Also, is going to be rolled out into Europe. We have 3 Anantaras today. By the end of this year, we will have 10 Anantaras this year. And also it gives us a good footprint. And there is cash actually. As long as you have a strong performance credibility and a strong performance track record with really good people, you know some of these big funds are more than happy to enter into a joint venture or a partnership or a sale and lease back and continue to support the company as well. And that's what we have seen. And we will be announcing some asset recyclings even this quarter and also the next quarter as well.
Ah,
And we managed to get them back at a very low capital yield. We're doing asset recycling at 4% cap. No one will get
oh,
these
wow.
rates anywhere in the marketplace.
Yeah. Well. Again, that's fabulous, and that's amazing that you were able to trade at those cap rates. But I guess if you have a sound asset in a good market, the asset transactions are still carrying very good evaluations. Dillip, let me turn it over to Sam here in a bit, and I will be back with you in a bit. Sam.
Thank
Thanks,
you.
Abhi.
Yeah, Dilip, I have a question relating to the industry and how perhaps the industry need to evolve and transform from what it is now. And the angle I'm taking is that many hotel school graduates tend not to stay in the industry. They become entrepreneurs. They're doing different things, and they're definitely not attracted to the grind of, like Abid and I, and maybe you. We were used to be. We were very happy to become management trainees, or we came from an industry like yourself. And understand you were in IT before you came into the hospitality industry. But how do you see the industry evolving in order to attract young leadership that is going to bring this industry forward?
That's a good question, Sam. And I think it's a big challenge. I think most of the hospitality players will face today. Prior to COVID, there was this thing called, we had a war on talent. And basically, every single hospitality player was looking for talent, and there was a shortage of talent. And of course, these days, the biggest issue we have, especially with the new gen, is that they come out of university and they think that they need to become a GM straight away. So they're not willing to go through the treadmill, as what we have done in the past, so that we really understand the business from ground up. But they feel that they need to come into a management position. But there's also a big shortage as well. And what we did was, actually, to that point, we found that there was this huge gap in the marketplace about 2 years ago. And we have been negotiating with the government in Thailand, to launch the hospitality school, in order to resolve this. So we wanted to launch a world class hospitality school in Thailand, so that we can then service people from Asia, from China, from Middle East, from Cambodia, Laos, Vietnam, Nepal, Sri Lanka, all these places where people can come and learn to become a hospitality professional, and also obtain a degree which would be world class and world recognized as well. So we partnered with La Roche in Switzerland, and I'm glad to say, after a year and a half, it took us a long time to get the license. But I think the Thai government felt that there was a big gap and there was a need to train and get this talent on board, and they approved the license. And I have to say, we had our first batch, which we took on in the month of April. Unfortunately, it's online at the moment. We are unable to bring candidates from other parts of the world, but we've had some good uptake, and I hope we'll be able to fill in the gap in the future. And what we are trying to do is to offer something, going beyond La Roche, is that people will get both the academic experience and also on the job experience with all our hotels. And the campus itself is situated in one of our largest hotels, which has a conference center, which has one of our big hotels, and everything else. So they'll be able to get some hands-on experience as well, and to become a true hospitality professional at a much lower cost, and also, will be able to fill in this gap in terms of talent as well in the future.
Yeah. Do you see, we had the discussion with some other guests about how the industry would need to evolve and change. One of the issue was that the very much of a hierarchical organizations that the hotel industry is known for, in order to succeed in the future with the young generation, has to be more like a networking organization. Any thoughts on that? How you see any of those fundamentals that has been around since Escoffier and Ritz and all these people? What do we need to do now to attract the younger generation who may look at startups as a place to work?
I completely agree, Sam. I think it's something I have seen, and it's quite frustrating because we also asset manage. We also third-party asset owners as well. So we do have Four Seasons within our portfolio. We have Marriott's, including a St. Regis, within our portfolio. We have a Radisson, and I think and prior to joining Minor, I was also with Orient Express, where you pretty much learn from some of the frustrations you have with some of these bigger players who don't have the flexibility, who have so many layers in the company, and I call it the fat layers, because these people, they pretty much they're paper pushers or trying to justify their job. And I think it's not working with some of the young entrepreneurs or some of the new gen. They are looking for something different, and they're looking for something where they can show or showcase their entrepreneurship, and also showcase that they can achieve something and they are able to add value to the business. So it's not something where you put them into a box, you give them a manual, and you say these are things you can do, these are things you can't do. Why do it? When you employ a professional, let them get on with their job and let them actually create something which will be fantastic for us. And that's why we employ professionals in the industry. So even though I actually interview every single GM who come into the group, and I always say to the GMs, look, we're not a Marriott, we're not a IHG, we're different. We are a company which is run by an entrepreneurship, and therefore you have a full capability and full scale to create the experience and to make sure that you deliver this as your own business unit. And that's what we do. And actually that attracts much better talent, and we've been able to get some really good talent, and also the new gens as well. The new gens love it. Even our office, we completely transformed our office. We have work from home, we have flexible working hours, we have hot desk, we have everything, where you need to change your mindset. And also the organization has evolved more into a matrix type structure and not a hierarchy structure where it's very old school and it doesn't work.
Yeah.
I think the matrix type works. We get people exposed between our three businesses, between food, between fashion, between hotels, and even within hotels, we have timeshare, we have spa, we have residences. So we get them involved into everything, and we try and maximize their talent and their usage and their creativity as well. So, and it's worked really well for us.
Very good. Well, thank you very much. These are really glad to hear your answer. Now, for all the viewers, I know we have several hotel school students and master degree program students who are viewing our program from around the world. I encourage you, and we encourage you, to put some comments or questions while we have this discussion, because now you have some experts. We will have Rahul soon joining us again. Ask these questions and bring your comments forward so we can evolve into that discussion. So thank you very much, Dillip, and back to you, Abid.
Thank you,
Dillip,
Sam.
one quick question before we bring Rahul back into the conversation. Talk to us a bit about the future. What does the future hold for Minor International, but specifically the hospitality group?
I think for us as a hospitality company today, on the food side, we are one of the largest players in Asia. On the hotel side, we are the top 20 hotel companies in the world. And I would like to see that on the hospital, on both cases, that we continue with our growth. And I think for us, we are not focused about maps on the ground. I think at the end of the day, our focus is to make sure that we develop talent, we have the best people in the industry, and moreover, it's all about earnings and profits. And I think for me, if you ask me the shape of the company, I want Minor to become the most profitable and a successful company with the strong team in the future, and not with the most number of hotels or most number of restaurants. I think it's the other way around. I think this is where the short-term goals plays against the long-term goals.
Well, fabulous, Dillip. Thank you so much for sharing that. Sam, if you don't mind, let's bring everybody back together. And to your question, Sam, about the future talent, there was a question online from Sabin Lamachan, and I'm sure I'm mispronouncing the name, so forgive me. It was a question about people that want to start their career and possibly one day to own their own brand in hospitality sector internationally. Rahul, if you don't mind me directing that question to you, any recommendations for the young professionals that are coming in the sector to grow and possibly have their own brand one day?
Sure. I think Dilip has shared some very, very pertinent points in terms of, he started off the discussion about taking care of your people first in the times of any crisis. And then he moved on to end the conversation by talking about the importance of training and the importance of getting a better understanding of the hospitality business in itself. I mean, the hospitality business also has become so dynamic that nowadays you have people, usually I would say that before you would have someone just purely focus on front of house or someone just purely focus on sales and marketing. Now you have so much of cross department training or cross department exposure that goes on. I'll just in short like to just answer that question by saying that first one must understand the business fundamentals in terms of being in the business itself of the operations. I mean, we all, in our very own way, have started right at the bottom of the pit, as one would call it, and then moved our way up to come to a certain position. I mean, even when it's starting, when I was in university, I was washing dishes, right? Now that's a way of, that's at least something to get you trained to move in the future in your life. And everyone should have ambitions to grow in this business, should have ambitions to aspire to have their own brand and hotels. All I would say is that creating a brand is not easy. As one would just say that I want to develop a brand. It's not impossible, but Dilip will agree with me that creating a brand is a monstrous task and it requires a lot of time, it requires a lot of effort, and it requires a lot of investment. Now, if you want to do it for the short run or the long run, you have to decide, but building a brand is going to be a long-term investment. And I would say that that will also, and brands, these days, there's a reason why you have big companies like Marriott, which acquired Starwood. You have companies like Accor that acquired Fairmont or the Movenpicks, because they themselves realize that creating a brand takes a long time and it takes a lot of capital. So people with capital are able to buy companies with successful brands at the right time. I mean, I must applaud And hats off to Dillip and Bill and Minor to be able to have been able to identify an opportunity like NH at the right value and a right strategic fit. I mean, I'm sure their brands and their hospitality businesses would have been able to conquer the so many different countries themselves, but it would have taken them much more time than what it has taken Dilip now to have acquired this investment, and now they have a global footprint. So it's
Yeah,
just a
yeah.
question about having aspirations, but having them with a calculated approach and an approach that is going to work for the long run while focusing on the short run. That's what I would
Well,
like to say.
certainly building brands is not for the faint of heart, that's for sure. And to get the brand traction, it's even a longer process. Keeping to that theme, gentlemen, if I may ask you, all of us know that the employee experience inevitably drives the customer experience. What really needs to happen to live that value, particularly as we come out of the pandemic? And Dilip, if you don't mind, I will throw that question to you.
Okay, I think the most important thing is like, we have to put ourselves in their shoes. And also, like, basically, when I was getting into the hotel industry, I had aspirations and I needed to get to somewhere. And basically, like, every single person who comes into the hospitality industry has the same aspirations. They have dreams, they have aspirations. Some people are very passionate, some people really like what they do, but they don't want to go further. And also, it's good to hear that people want to create brands and they want to do something and they want to create something, which is fantastic. But I think everything is possible as long as you set your mind to it. And also, there's a lot of hard work, as Rahul was mentioning. And I think from an employee perspective, it's really important as people now come out of COVID, training is really key. We are getting our team members. I don't actually call them employees anymore because I hate the word, and even HR, I don't call them human resources because, that's old school. Because I used to say human resources is where the human remains stay, and we call it not we actually call now our HR person, we call her the chief people officer, business of people. So I think what we are doing is we are actually promoting and ensuring like our team members are learning another language, are upskilling themselves, or are able to do transfer of skills which they have done in the past. The last 18 months is where we were really put to test. We had to really shrink our HR organization, our people resources. We had to do smart planning, and everyone did everything. Like, even we had the gardeners who were doing washing up, and people were, even our waiting staff were doing security, and like, multi-skilling, upskilling, transfer of skills. That is really crucial. I think that's what we are focusing on. And we're also trying to make sure that they use this downtime to learn and upskill themselves. We're asking our people to learn another language, and we're also saying to them, you learn another language, you do we have a lot of training courses which we have on our platform. And the more they do, I think the more opportunities they will have, and the more career development they will have, and they'll be able to better themselves in the future.
Fantastic. Well, let's talk about the recovery. And there's a question online from Manish Jha as to when do you gentlemen see the recovery coming back, and any markets that you see recovery. I know Rahul had talked about some of the leisure markets that are doing well. Dilip, any thoughts from you? What trends are you seeing relative to recovery, and when do you see that coming back?
I think that's a good question because I would say it's $1 million question. As long as the various governments or the various politicians don't screw up things in their own countries, I think the recovery is going to come really fast. I have seen it because we see what's happened in China. China has come really strong. All our restaurants are doing really well. All our hotels are doing really well. Mainly, okay, I understand it's domestic business, but it's still coming really strong. We see what's happening in Europe today. In Europe, we are starting to see recovery. As I said before, this will be our first month where we will break even on a cash basis after 18 months of losing money. So I think, Europe is starting to see some green shoots, but I think the key to recovery is vaccination. And I think we need to make sure that it's not just vaccinating some of the first world country, it's about vaccinating the whole world, so that everyone can travel freely, everyone can have a holiday, and people are not worried about safety, health issues, or anything like that. And also, the countries need to have some clear direction in terms of travel and travel passports and everything else as well. I think recovery is going to come fast. Like, we've gone through, like, we are looking at data points today. And based on our data points, I think, recovery is going to come in Q3, Q4, in some of the segments. It's going to come very strong in the leisure segment, we believe. And I think the MICE and the corporate segment, I think it would be next year, because I think it's a bit too early because most of the global companies are not traveling. Most of the global
Yep, yep.
companies are not going back to work until September. So we don't see that recovery happening this year. It's going to be next year.
Well, thank you. Thank you for that. Raul, would you have any further comments to add to the recovery trends that you're seeing in possibly the markets that you operate in?
No, I think Dilip has quite well summarized what I also feel. I mean, it is obviously is a $1 million question when it is going to come back, and when we started seeing some sort of returns as we returned to normalcy the third quarter of last year, and we are back to the same situation. So I think we can speculate as much as we want, but there's no specific answer. But I do would like to share, as I mentioned to you, that I do see a huge potential and focus on the leisure market. And I also believe to a certain extent that the mid market, more so the corporate market, is going to come back to normalcy before the rest of the segments, because people are still traveling, whether it is limited or not. People are still traveling, people are still staying in the mid market hotels. So you do see some traction in that front. So I would say that recovery will be slow. I mean, for the entire hospitality fraternity, I mean, it's anyone's guess. But I can tell you that the leisure market is going to show faster recovery. The mid market is going to show faster recovery. And I mean, your experiential and your wellness businesses. I mean, I'm sure Dilip's properties in some of the far flung areas are doing phenomenally well. Your beach locations are doing phenomenally well. I mean, our hotels in some of these locations have also done quite well. So I see that trend
Fabulous.
continuing for some time.
Fabulous. And Raul, one more question for you. As a matter of fact, I would like both of your thoughts on it. If you could quickly name the three innovations that come to mind in hospitality sector, what would that be?
Innovations, you mean in terms of just anything in general?
Yes, in restaurants and hotels, things that are being done differently to make the industry better.
No, I think we touched. I think Dilip and I both touched upon this, and what I said was, the whole customer experience from your booking to your checkout is becoming quite paperless. And those many hotels, like I said, hotel industry is a touch and feel industry, and people are trying to find ways to find balance between the touch and feel and personalized experience and your digitization of the whole experience to give that comfort factor to the guests. That's number one. Number two would be also the safety protocols and the safety measures in the hotel itself. I mean, when you talk about someone entering a hotel, you are being you have your sanitization or your temperature testing, and you have your now you have hotels also that are doing their working on their entire MEP system to make it much more friendly from an environment perspective, from the spread of any pandemic or spread of air and so on and so forth. So from a product perspective, also a lot is being done. Third, I would say, as I mentioned, even from an F&B perspective, I have noticed that a lot of hotels have also re-engineered their menus to make it more sustainable, and also in terms of introduction uh, of um, of food that is more palatable to current times and current times. So I see these are some of them. These are some of the three things that I see, and just fourth, although you said three, but I see that the hotel companies are laying a lot of emphasis on the leisure markets and creating experiences around them, and also connecting as a part of their portfolio leisure destinations, even though they may have been difficult to get to. But people are now
Fair enough.
wanting to experience roads less traveled than roads frequently traveled.
Yep, yep. Well said. Thank you for that. Dillip, anything you would like to add? Any innovations that come to mind immediately?
I think no, I think Rahul pretty much covered everything. We have, for us, the digital transformation we see is a big step, both on the food side and also on the hotel side as well. Um, in spite of, there are a lot of things we can go paperless today and make our systems much more efficient and make it, and make sure that we are at the front of our guests all the time, because we see that the engagement with the customers is becoming key. We see that there is a big shift from the OTAs to brand.com, because the guests feel safer to book through brand.com, and the companies should capitalize on these things now. And if they don't have if they don't provide the guests the best customer experience, they will lose these guests. They will go back to OTAs, which would be a
Yeah,
shame, because you're
yeah,
having a 20%, 15 to 20% leakage on your rate.
yeah.
So I think that's important. We see that the wellness is becoming key. Like, people are much more focused on their well-being, their health, their immunity, their safety, everything. So we launched 4 different wellness concepts, which we are trialing in our hotels. So hopefully, whatever works, we will roll it to other hotels as well. And we see that there is a big shift in how people are booking today, and also generation travel has become a key thing as well, because people feel, visiting friends and family and relatives is becoming an important thing now, especially after COVID, when they haven't seen their families for 2 years, and they
Yeah,
want to make
yeah.
sure that they try and touch base with them as well. So yeah, so I think there's a lot of new trends coming into the marketplace, but I think the key is going to be customer experience and brand
Terrific.
loyalty. Yeah.
Well, thank you, Sam. I know there is a lot of chatter online. Any questions and thoughts from you, or anything you seeing online?
Yes, we had one question from by Karanvir. Uh, can hoteliers solve labor shortages through technology? Are there certain things that you think can be solved through technology alone? Maybe Dilip and then Raul. Any comments?
Absolutely. I think there's a lot of stuff where it is very highly labor intensive, but doesn't need much of a skill set, can be easily, we can digitize and transform into more digital as well. We have done that. Like, say, for example, we use what's called fast pass within NH. The guests love to book their room. They can choose the room. They'll be displayed different options. They can see the room they're booking, can choose the room, and then when they arrive at the hotel, because they are pretty much in urban city locations, they don't need to queue up. They can just go straight to the room, get their keys, get the mobile code on the key code on their mobile, open their room, and it's done. And the same with checkout as well. So we're making our guest experience much more seamless. At the same time, we also want to make sure that the touch points are maintained as well. Like, and as Raul was saying, people travel for experience, and that's where we are deploying our resources to make sure that we can deliver on those experiences. And we are now upskilling our people so that they can get transformed and move into other things where they can really add value. It's the same, like, when Y2K came in 2000, everyone was worried that they'll be losing their jobs, and there's going to be a big unemployment market in the place, but nothing happened because people actually there was transfer of skills, and we believe it's going to be the same thing. The hospitality industry will have to transform itself in the coming years because there's not much transformation which has happened within the hospitality industry, and there is a need to do it.
Thank you. And how about Rahul? Anything you would like to add to this?
No, I think Dilip touched upon all the key points. And like I said, as I mentioned, that hospitality business will always continue to remain a very personalized business. It is going to be a guest focused business itself. But yes, technology is going to play a intrinsic role in terms of making the experiences for the guests very important, and also from an operational efficiency and optimization, cost optimization point of view. So I think, but one will have to see how you can balance that in the different segmentation of the business itself. I mean, for example, you can afford to make it a completely seamless business from a budget or a mid-market hotel, but you cannot do that from a luxury or a wellness business whatsoever. So you have to strike the balance from between labor, between the services, between the standards and technology, keeping in mind how you can make it most efficient. And the ethos of the business of hospitality is not lost. I mean, at the end of the day, we are a service industry,
Yes.
and that is not going to change.
Terrific.
Well, thank you. Thank you. That's all the questions we have from my side.
Well, thank you for that. One last question, gentlemen. I know we approached the end of our time that we had allocated. Any concerns, long-term and short-term? Just a couple, if you don't mind, that you were concerned about this sector. And Dillip, if you don't mind, I'll start with you. Concerns for the sector, long or short-term? Dillip, I think you're muted.
Sorry, can you hear me?
Yep, yes.
Okay. I think the short-term concerns would be building up the confidence so that we can get travel back on track, uh, both in terms of leisure, corporate, and everything else. There's going to be some short-term concern with regards to liquidity and support from the various governments, from the banks, and I think unfortunately there will be some players who will be coming into the market in terms of distressed assets, and that's going to flood the marketplace as well. In the long term, I think the whole industry, we are looking at consolidation, which also could alleviate some of the smaller players so they are not able to compete with the larger players. And I think that's it. But the sector itself will rebound quite strong because there is, whether we like it or not, I'm actually in the UK. The Brits are waiting to get out. They need to get out, at least have their holidays at least once a year, because otherwise they go crazy. And it's the same thing in most European countries. And the good thing is, like in Portugal, for example, at the moment we are running at high 80s the occupancy. But not only that, our rate today is 30% higher than 2019. This is pre-COVID, which is
That's
fantastic.
fabulous.
So the
Fabulous.
industry itself will come in quite strong, and because of, we see that the new emerging markets are starting to travel, like China, for example, India, South America, and places like that, and that will actually increase the tourism numbers and also the spends as well. So so if you ask me, I'm quite confident with regards to the long term thing, and we just need to go through the short term ripples and make sure that the companies have the staying in power and focus on the business and focus on its people, focus on not losing money, focus on protecting the balance sheet and the cash flow. And that's it, because most of the hospitality players, unfortunately, their focus is more on the brand and the image and all those things, and they lose focus on the actual business. So I think
Yep.
if we can shift
Yep.
their focus, then I think these businesses will survive.
Well, thank you. Thank you for that, Dillip. Rahul, as you heard, Dillip is very bullish on the industry. From your lens, any concerns for the sector, short term or long term?
Actually, I only see opportunities, and I think that's what Dilip is resonating as well. I only see that things are going to get better with a period of time. Can you hear me?
Yep, yep, yep. Yes, yes, we can hear you. Rahul, I'm not sure if you can hear us, but we could hear you clearly. We've
Can you guys hear me? I'm not sure if you can hear me.
yep, 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 we
We
can.
can hear you well.
Yep. Well, it seems like we're having some technical difficulties, but look, we've approached the end of our time. Thank you so much to Dillip Rajakarier with Minor International and Rahul Chaudhry with CG Corp Global and CG Hospitality Holding. Fabulous conversation. I've got lots of other questions, but unfortunately, time dictates that we end this session now. Thanks for being with us, Sam.
Yes, I'd like to thank, first of all, I'd like to thank our panelists who joined us today. It was a great discussion. And also like to thank our viewers who has been staying with us. That's most appreciated on the live show, but also the replay viewers, because I know there's so many people who will tune in on the replay. But also, if you're interested listening to this episode as a podcast, we have a Hospitality Talks podcast. So there are many ways you can reach us. And so if you like what you hear and still just give us a thumbs up and follow-ups, that we most appreciated. I also like to thank for the question I received on my side from Karanbir. Thank you very much. And Surabi Kaitan, who he enjoyed the show also. And the other comments came from that Abir was placing. So thank you very much to all our panelists, and we look forward to seeing you next time in our next episode.
Thank you again.
Thank you.
Thank you. Stay safe.